प्ले तो नहीं हो रहा।
Just pulled up to the house. Don't feel like getting out. I'ma just lay back and crack this window. I've been doing my best, taking a moment to rest, feeling stressed out. Give it a cut. I put that on God when it gets hard. I stay on my job like no days off, so you can go home with the negativity, with that broke mentality. Jump on jealousy, my bad. Get away from me, 'cause I've been working all day. Can I catch a break? Give a pretty brown girl her space. You can keep your bitter. I'ma make a better way. Hey, hey. Already got the world on me. Give a pretty brown girl her
2.33
space.
मिनट, ये
You
एक
can
मिनट
keep
पीछे
your bitter. I'ma make a better way. Hey, hey. Catch a break. Better way. Oh, Mom and Dad's only daughter, do I make you proud? Writing my life in lyrics, do you like the sound? Seeking approval constantly. When it's my truth I own, I speak it, don't make sense now. Give it a cut, put that on cut when it gets hard. I stay on my job like no days off, so you can go home with that. Jump off my back, 'cause I've been working all day. Can I catch a break? Give a pretty brown girl her space. You can keep your bitter. I'ma make a better way. 'Cause I've been working all day. Can I catch a break? Give a pretty brown girl her space. You can keep your bitter. I'ma make a better way.
Welcome to this show, the Taresh Financial Freedom Talk. It's a simple conversation about what's happened last week, what can happen this week, what can you expect, some good ideas, some good tips, tricks. So let's get deep dive into what you can expect and what can be coming up in the next 10-15 minutes. It'll be a very short and brief video, something which makes a lot of sense. So stay with me till the end. There are some good gifts you will get. So let's begin. So I'm going to be sharing these 7 things which I've shown here on screen. And the 7 things are: number 1, I'll share the market updates. Number 2, I'll be taking you something important. Number 3, behind the scenes, I'll share something, what's happening, what actually happens behind. A book summary, very briefly, I will recommend and I'll share that with you. A video link, some task I will give you for this week, and finally, what's next. So let's go deep dive into what's in store with us for today. So here are the market updates which I've brought up. So what I'm sharing is what's happened in the last 1 week and what are the repercussions for us here as investors. As a financial planner, what would I like to tell my clients, what they have to keep in mind, what's gone by, what's going to may happen, and therefore be informed while you are investing. These circumstances are what tell us as financial planners what you should be doing. And based on these analyses, studies, every day, every week, you get informed by us as your financial planners what you should be doing in your investments and financial planning. So let me take you deep dive into what's happening. These circumstances are what So I wanted to first take you through the domestic equity market. What's the scenario? Well, the last week's gains was a 40-year following a 40-year high of the US inflation data which just come up, and it raised the Federal Reserve risks and the fears that they may raise the interest rates in USA, and therefore the S&P, BSE, Sensex and Nifty 50 fell by about 1% each. That's happened last week. And what I see is a negative with capital goods. Most of the goods are not moving so positively, except for some fast moving consumer goods like FMCG. The BSE capital goods fell by 3.8% and FMCG by 2.3%. But these sharp losses were trimmed after the Reserve Bank of India maintained its accommodative stance last week. And RBI kept the key rates unchanged, and the metal and the auto stocks witnessed some buying interest with a rise of just about 0.1%. So last week's BSE Sensex change was 0.84, 3-month was minus 0.95, and the last week was also minus 0.84, and an annual change positive of 12.85. And all the other indices across the last 1 year witnessed positive double digit. So there is something positive happening if overall the global market is to be considered. If we look at the global equity market scenario, then the US stocks ended higher this week, supported by their stock-specific buying gains. And these gains were capped by consumer price accelerated by a 40-year high, raising concern that the Federal may hike the interest rates. And in Britain also the FTSE rallied about 2% gains in various stocks, while the Prime Minister there said that the COVID-19 related restrictions may remain and they may be lifting. That's the hint there. The Japan's Nikkei rose by about 1%. Hong Kong's Hang Seng surged by 1.4% due to the gains in the energy, financials and other sectors. There were concerns over the impact of the US move to add 33 Chinese entities in the export control list prevented any further gains therefore. China's Shanghai Composite therefore advanced by 3% following good buying interest in consumer firms. And overall, let's look at now at the domestic debt market. Well, the call rate last week ended was 3.25%. The previous week was 2.95. That's a small uptrend there. Last 1 month, 3 months and 1 year also is a positive uptrend. And we have looked at the government bond prices rising this week after witnessing a fall for the past 4 weeks. So there may be changes in the Indian debt market in the coming 1 year. But overall, short term, the yield on a 10-year benchmark was 6.54, which is the year 2032 settling out at 6.7%, compared with 6.88 of 4th February, last week of 2022. The bond prices also have seen a little slight brighten out, and the yields have remained under pressure owing to the expectations of more cancellations of remaining debt auctions this year. The RBI policy, as I said earlier, there were key policy rates which were expected to continue, and they remain unchanged as RBI decided to continue the accommodative stance as of now to boost the economy and the country's overall growth as such. Now, coming to the global debt market, the scenario there. So, as I said earlier, the US Treasury prices declined sharply, ending the week 10th of February, following a rise in the consumer prices there. The higher inflation readied a fueling of the investors' expectations that the Fed may tighten the monetary policy at a faster rate. And these have led to yields rising further on a better than expected domestic monthly jobs reported last week. And the yield of a 10-year benchmark there ended at 2.03%. In the domestic market, the Reserve Bank of India's policy, which is the Monetary Policy Committee, kept the repo rate unchanged at 4% and the reverse repo at 3.35. Now, this is a decision to continue the accommodative stance for the country, and the marginal standing facility and the Reserve Bank's rate were also held at 4.25, which means that the central bank maintains a growth projection of 9.2 this fiscal and 7.8 growth for the next fiscal. Inflation 5.3 and projected 4.5 for the next fiscal. India's index, the industrial production, which is called IIP, rose by 0.4 in December 21 compared to 1.3 in November 21. So overall, these were what points I wanted to highlight. But as the finance minister said, that the fiscal deficit of 6.9% for the current fiscal is something to be sustained and observed, and is a responsible target, I would say, for the government trying to keep the balance between the spending and the fiscal prudence for that matter. Prime Minister Narendra Modi also indicated that the small, micro and the medium enterprises, MSME sectors, will enter the defense sector and help in self-reliance of the country. So that's a major booster, as the banks have also been offering a loan of total, as of now, 3.1 lakh crores under the Emergency Credit Guarantee Scheme, ECLGS, for the MSME sector. The RBI deciding to raise the investment limit for the debt market for the foreign portfolio investors from 1.5 lakh crores to 2.5 lakh crores under the voluntary route effect from the next financial year, 1st April, is a welcome step in that direction. So overall, with the micro and macro indicators, I see as an overall growth projection for the country in a positive environment. Even SEBI issued guidelines for the asset management companies with respect to certain Indian accounting standards to be maintained. And there was a new format for disclosures in the abridged prospectus to come up. That's what I wanted to say in the domestic market, what happened. And let me quickly come to what you may expect now in the next coming week. So overall, you may expect a positive environment, not major any shakes or turns up or downtrend overall. And the BSE Sensex may see plus or minus of 100 or 200 points for that matter. With that, I'll close this section and I'll now go on to the next section. And I hope and I trust you like this particular section. So the next section is so that's an important part which I wanted to announce in this episode, that I will be doing a weekly show every Monday night where I will try and recap what's happened and what may happen this week so that investors who are prudent investors can take an overall look, understand in the easy man's language what they can expect, what can happen, any major things to happen. But obviously, all my clients who are goal based, having their financial plans and then doing their investments as per the financial plan, need not panic at all because they are all investing for long term, and any short term goal is also taken care while their investments were taken care of. An important part for them is that any goal which is nearing 6 months, they should port from equity to debt so that any ups and downs of the market can be taken care, and there is no rude shock for them to see that the 6 months goal, whether it's a child's education fees to be paid or any other goal which has come near, sees a downfall in the overall corpus which has been created for that goal. So that's very important while we look at these micro and macroeconomic indicators. Now with that, I'd like to take you behind the scene in the third section now. Now this section is very important and something nobody tells you, nobody shows you, but I'm going to show you very bare how we do, but obviously very, very briefly. So just try and be with me and try and see how we do evaluation of what funds we're going to recommend to our clients. So let's go deep dive and I'll keep explaining how I show you. So this is our software which we log in, and this is where we maintain our data for anything that we are doing. Give me a minute to just log in and show you. So here, this is what we do at the background. And I've got these utilities where we do a lot of comparisons. Now I'm going to show you how this is structured and actually how we do. So we pick up the ratios. We do only in direct schemes comparison, only in close-ended for a lot of reasons. And most of the clients or websites will give you only this 1 year, 2 year, 3 year, 5 year returns. So let's say I focused on small cap funds and I want to pick up one fund. And how do I select that? That's the objective of this particular show here. Now what I'm showing you here is that when I'm looking at this kind of analysis, as you can see on screen, how do I go back and see that what is the most important and criteria which I select? And on top in the search, I have put in small. So now you see it brings up all the small cap funds in particular. Earlier, what you were saying were all funds. Now, a lot of websites will show you this, what you see 1, 2, 3, 5, and you may select, okay, Quant, Axis, Nippon are the top 5 year. You may look at 1 year and you'll be amazed at Quant or Axis or Nippon. My disclaimer here, I'm not promoting or demoting any particular fund, and I'm not saying invest in ABC funds. It's just for education purpose and information that how we do in the background, which changes week to week, month to month. And my clients know very clearly, this will change every quarter. So one fund selected for them is not forever. So do not copy paste and say, okay, I've found the best what Taresh was showing. That's not the criteria here. Now when I've got here, if you look closely, I've got Axis, I've got Nippon, and I've got Kotak, HDFC, ICI, DSP. Now these are my top 5 based. Now you can see the returns of 5 years. I've also looked at the AUM. Why do I look at AUM? Now here I've got Nippon, SBI, DSP, Axis, Kotak as my again the number 2 shortlist. But if I've done a shortlist here, now I will move into what I do as a financial planner. I will not go deep into what these mean, but there you can see alpha, beta, mean, standard deviation, Sharpe ratio, Sortini, and that's where we do a number wise down the best to the worst. Each criteria has got marks which we give and say, okay, out of these 5 funds which I've selected, which has got, let's say, the highest alpha, don't try and do it yourself, beta, the mean ratio, the standard deviation, the Sharpe ratio, and Sortini. Now let's say after this analysis, I select Axis. Now I look at where it is investing. So I go here and I briefly look at the companies they're investing, and I now look at very small comparison if I had to select one fund. Here if you can see, the expense ratio is 0.36. So Axis, make a note, the expense ratio is just 0.36. It becomes my immediate favorite. Let's go back and see what I had pulled up the others. So if I had Axis and now I choose Nippon, look, the expense ratio at 1.03%. So it kind of says that this is little higher. 0.7% of what I'm trying to get from Axis is higher here. Let me go to SBI. 0.77, still higher expense ratio than what I'm getting in Axis, and all other ratios kept in mind. Now I go back again, and therefore I do analysis of all the small cap funds in the top 7 categories. And I might come back with Axis as my favorite, the heart showing there, that this is my favorite. So that's one small brief. I could do a detailed comparison by downloading them in an Excel, and then I give marks to each one of them, as I said, on each one of these ratios. So that gives me complete knowledge and understanding and deep insight on what I have to select for my clients. Every quarter they will change. And going forward, these ratios tell me they will perform or they will not perform. What you see on various websites, recommendations, are primarily returns given in the last 5 years. But you don't drive looking in the front and then you start looking in the rear view mirror, because that's going to lead you to accidents. So don't cause accidents while investing. Now let's go about now to the third topic, which I was showing here. So that was behind the scenes. If you liked it, just give me got it in the comments below. Now let's go to the fourth section now. And what do I have in the fourth? Well, there is a book there, and I want you to read this book, and I will tell you why. So the book is called Happier, and the link is given in the YouTube link. If you open the YouTube description below, there is an Amazon link I've given there. Now this book I've read a couple of times, therefore I can easily recommend. It's one book which tells you what makes you happy, what can make you happy. Now, after I read this book, I did one analysis, and you can make a note of this one line. What is happiness? Happiness is if you have the money, you have the time, you give meaning to the time and money you spend with your relatives, your friends, or on yourself, on certain places, occasions, or on a holiday, you can say on a yacht, or just being at home, being lazy, or spending time and money on your hobbies. And you have the strength to enjoy these moments, is called as happiness, simply. So do not look at returns. When you're looking at investments, look at what makes you happy. If you've got your specific goals, and those goals are happening, whether it's a 5-year journey or a 10-year journey, do not be dismayed by short-term negative returns in your investments if they are being properly tracked by your investment advisor. Let me take you to the fourth point today, and that's a video. So I want you to watch this video. This is on saving taxes, and I'll take you to this link now. So Amazon, before I go there, so I'd shown you this book. So just go to this link which I've sent in the YouTube below, and either you can buy the Kindle book or audio or the hardcover. That's the Happier book. Now I'm taking you to the video which I have shortlisted for you. And that video, again, I'm given the link here. Now I'm calling this video just done about few days back, how saving taxes by investing in ELSS helps you to be rich. I have very clearly outlined here. And while this video plays, so in this video, I have tried to explain very clearly how you can plan your taxes and 11 ways to consider while planning your saving of taxes under Section 80C and plan your wealth creation along the way. I've given comparisons of 5-year, 10-year and 20-year past performances and how you can plan and think going forward for the next 3 years, 5 years and 20 years. Integrate into your financial plan, integrate into the goals which you have made, your financial goals, and let that happen over a period of years. There is a comparison I've given and there is a direct analysis of the safest investment and what you can do if you have a time horizon of, let's say, 10 years or 15 years for every year investing for saving taxes and investing for the long run. So do look into this video, which has been picked up by a couple of national daily newspapers. An article has been carried from this video and with my inputs with them. So continuing with the next section. So how have you liked it till now? Give me your feedback. What do you expect next? Let me show you what is next. So next is, let me pull this down. So I'm bringing this 6th point now in this video section, which is one task. And I want you to think of this one task very carefully. Whatever your goals are, your income less of what you can save, or at the moment, let's say what your expenses are. Income less expenses is what you can save now. Calculate that amount for the last 12 months, what you can do for the next 12 months, and call that this is what I can save on a monthly basis. Have a goal for the next 12 months to 5 years. 1 year to 5 years. Now with this one goal, what you want to achieve, it could be clearing of a debt, understanding how your loans are working, whether it's a house loan or personal loan, whether that's a goal, whether you want to buy a new house as a goal, whether you want to plan for your retirement, or you are married and got children and you want to plan for their education. Be clear at least of one clear goal, and write it out in the following format. Very simple language I'm giving you, a task. Give a date to it and call it my goal for that date or year. Let's say 2025. In my words, I would say I, Taresh Bhatia, have got in the present tense rupees X on. Now you have to give a purpose for the purpose of by doing what activity you do, whether you're salaried or you're entrepreneur or businessman or a professional, by doing business, by offering my services or what you're doing, and what does it bring you finally, whether it brings you joy, happiness, or you call it success. So make this goal. This is my task for this week, and I'll come back how to take it further in the next week. So the last section is, what is next? Now I'm going to ask your inputs. Tell me what you feel should be covered in this video in the next week. What you feel I should be doing. Whether you want to be on a forest trail, enjoying how life has given you lemons and you made lemonade and you're enjoying it. How you want me to give you more inputs? Should I increase something more on the economy of the country and how it is doing? How financial planners work? I'll go behind the scenes. How you can expect certain goals to be achieved, and I will give you current value, future values, or what you can do per month. For example, I could take up a detailed small session on retirement and how you can plan your retirement with whatever money you have, starting with small amounts like 5,000, 10,000 per month, and then integrating into a bigger goal your current investments and saying this is what I think I can achieve. And then increase every year, let's say by 5 or 10% for the next 5-year, 20-year period. So I'll give that example also. So give me a feedback by giving your comments in the section below in this YouTube channel and tell me what you would like me to cover next. So till then, be a happy investor. Define your own happiness. Find your own money, which brings you more happiness. Find those moments which create those happy moments for you, and you can say, I'm on my journey to an eternal happiness forever. So this was a live show, and it's right now 9:30. I started this show at exactly 9, and I wanted it to be just about a 30-minute session. Everything was done in the last couple of hours. The preparation went, and I have launched this show. As you can see the logo, it's called Financial Freedom Talk. And this will be happening every week as I attempt to clear a lot of doubts and clear off the smoke which appears sometimes to be blocking our vision to see beyond what we see. If you liked all of this, please give me a good comment and share and like this with your friends on YouTube, and let me know how I can improve this further. I'm open to feedbacks. Thank you very much. Have a nice time and a good night. And this happened to be a Valentine's Day, so I guess you're with your Valentine. If you're watching it later, still you can come and give me your hearts and love to me. And